Hi guys, let's meet up with us again. I'm from Group 5. We'll be presenting about the rest of our presentations. But firstly, let me introduce myself. My name is ATIEKAH Binti M.ZAKI with matric number 277848. So before we start with our presentations, I will refresh back what we have been learned and learn about the taxation of banking. So firstly, we have learned about what is bank, the types of bank, the differences between banking and non-banking business, scope of charge, and the last one, if we have been covered about the tax treatment and also for the calculation that involved in the banking industry. So now I will continue to present about the tax incentive or tax exemption on the banking industry. Okay, firstly, I will present about the banking activity. But before that, we have to know what is a banking activity. Banking activity is a usual activity carried by the bank, or we can call it as the nature of the business of the bank, like saving, deposit, and so on. So, firstly, income tax exemption. Any company that involved in providing the suku or retail suku or issuance of the suku will eligible for the income tax exemption. So before that, what is suku actually and what is retail suku? Suku is a certificate of an equal value that represents undivided ownership of underlying asset in a particular project or in the special investment activity. While the retail sukuk is the types of government sukuk issued to retail investor, where the retail investor will be provided with the fixed rate of return on this type of investment. So as you can see in the slide, there is mentioned that expenses or additional expenses that incurred by the company on the issuance of the sukuk or retail sukuk will get deductions on the single or double deductions in ascertaining the adjusted income of the company. So the company that issued for the sukuk will get for the single deduction on the expenses, while for the company that issued for the retail sukuk will get the exemption on the expenses on the single deduction, and any additional expenses that was incurred by the company will get the double deduction. These rules will be effective from year assessment 2021 until the end of the year assessment 2025. Okay, second is the issuance cost of the SRI sukuk. Okay, firstly, we have to know what is the SRI sukuk. SRI sukuk is where the sukuk proceed will be applied exclusively for funding of any activities of transaction relating to the eligible project. So, in the slide mentions that the issuance of costs of SRI sukuk, there is a tax deduction if given to any company that gives service on the issuance of SRI sukuk, but the SRI sukuk must be approved and authorized by or logged with the Securities Commissions of the Malaysia. For example, the bank that's involved in managing or give a service of these kinds of activity or product is Alliance Investment Bank, and the rules are effective until year assessment 2023, and there is a extended to year assessment of 2027. Okay, the last one that involved in the tax exemption for the banking activity is a stamp duty exemptions. So as mentioned in the slide, all instrument that relates to the issue of offer for the subscription or purchase or invitation to subscribe for such or purchase of debentures as approved by the Securities Commission, and the transfer of the debentures will applicable for the 100% stamp duty exemption. And the second one, of any banking that making restructuring or rescheduling agreement between the borrowers and the bank itself will applicable for the 100% stamp duty exemption. So these two rules are effective from January 1, 2022 until 31st December 2022, which at the end of this year. So now let's move on to the non-banking activity. So non-banking activity is an activity that carried by the bank itself, but it is not their unusual activity. So first is Islamic fund management. So we have to know firstly is what is the Islamic fund management. Islamic fund management is a fund that offer a chance for the Muslim to invest in accordance with the Sharia, and an option for the Muslim investor. So it is a kind of a platform where it's encourage the Muslim investor to invest in this kind of fund. So the slide mentioned that any company that manage the fund of foreign or local investor will enjoy full income tax exemption statutory on the statutory income on management fees received established under the Sharia principle. So under this kind of rules, there is a condition where the fund must be managed in accordance of Sharia and certified by the security commissions. So for example of the company that carry on this kind of activity is a Maybank Islamic Asset Management Sendirian Berhad, and the rules are effective from the year of assessment 2021 until the end of the year 2023. Okay, let's go to the second one for the non-banking activity, which are the fund management. When the bank that give a service in terms of fund will get a tax submission on the statutory income derived from the business providing fund management service in respect of the following, which are firstly, the fund managed is accordance with the Sharia compliance and also must be certified by the Securities Commission, such as the for the following investors, such as local investor, foreign investor, business trust and resignation. And the second one is the SRI fund must be approved by the Securities Commission. These rules are effective from the year of 2021 until the end of the 2023. So the third one is the real estate investment trust. What is a real estate investment trust? It is a form of unique investment that purposely to make money through the property industry. So the bank will get a tax exemption on the income at least at 90% of total income distributed, and the rest is listed on the Bursa Malaysia. And any fees, any expenses regarding on the establishment of right will get the special single deduction. The second one is the final withholding tax on the income distribution from the rights, which has been exempted from tax received by non-corporate or foreign institution will get 10% off for the withholding tax. We calculated for 10%, while the for non-resident company will be taxed for the 24%. Any transferring of real property to the rights will get the stamp duty exemption on the instrument of transfer. And the second one is real property gain tax exemption on the disposal from the transferring of real property to the REACs. And the third one is no balancing charge on disposal of industrial building from a company to a REAC. So REAC is eligible to claim the balance of the unclaimed industrial building allowance of the disposal if the disposal company owns 50% or more of the units in the REACs. Okay, the last but not least is a unit trust. Unit trust is a collective investment scheme that allows investment with similar investment objective to pool their fund together. So, as mentioned in the slide, there is 3 points where the company will get a tax exemption on interest income from any licensed bank development, except for the case of unit trust, which is a wholesale fund, which is a money market fund. The second is will get tax exemption on gain on realization of investment, and the last one is tax exemption on certain interest or discount. So interest or discount is paid in respect of the first is the bond security issued by the government. Second is the debentures or sukuk authorized by the Securities Commission, or bond simpanan Malaysia issued by the Central Bank of Malaysia. So to be concrete here is banking has two different activity which was carried by them. First is usual activity like deposit, saving, giving loans. But aside from that, there are other activity that been carried out, such as I mentioned before, like unit trust, rights, and also for the fine. So we have to know clearly what is and differentiate what is different between them, so that we have a better understanding in the banking industry. So that's all for me. Thank you, and thank you for watching.